by the Bombay Stock Exchange, IPF.
Welcome back. You're with us here on Countdown. Joining us now is Mr. Menon from Subex to take us through the numbers that they've come out with today. Mr. Menon, thank you so much for being with us. Just to get a sense from you, initially, profits have really surged about 5 times this past quarter, even though sales are marginally lower year on year. If you could just, describe for us what's really gone on over the past 3 months.
Well, there are 2 elements to this. First of all, you should look at the nonlinearity in our business. We have stated this many times. I have shared this many times in the past. Revenue growth and profits, they are not exactly related like that because of the nonlinearity in the business. So if when one goes up, the other need not necessarily go up or down, or you could have an impact there. So generally what happens is, even when revenue growth is not too much, or even if there's a little bit of revenue growth, all of the revenue growth could flow through to the bottom line, impacting the bottom line in a much more significant manner. So that's what you're seeing. That's one element. The second element is that in these past few quarters, although we were performing very well on in an operational profit at an operational profit level, that was getting subdued by the exceptional line item, which was negative in most cases because of the variation in the rupee dollar rate. Now, in this particular quarter, that is not happening. The rupee dollar rate has remained reasonably constant, so the impact is minimal, and so the real operational profit is coming forward for everybody to see as a profit after tax. So that's really the second key element there. So what people need to understand is that what you're seeing today and appreciating as the kind of profit was there in the past few quarters as well, but that was getting subdued.
So, Mr. Menon, can you tell us about the business growth itself? I mean, what is the visibility in terms of fresh orders right now? Have you been able to get any big projects? And what's your expectation for the next coming couple of months?
Well, that is probably the highlight of the quarter, the kind of order intake that we have had over quarter 1 of last year. We have seen an order intake growth, if you look at the entire products business, of 52% over last year. If you just look at the core business that we are in, which is RMS, Revenue Maximization Solutions, that's a 63% order intake growth. This compares with about 45-46% order intake growth last year. So on the whole, order intake growth is very strong, and that is exactly what drives the business. That's what's going to drive the revenue going forward, and that's very positive. So, and this is on the back of the sort of contracts we've been winning from telcos for very long-term projects, reasonably large-size projects for managed services, for example, where we deliver our offering, which is the platform Rock, and then we manage that over a 3 or 4 or 5 year period. So that sort of contract, such contracts have been won by us in this quarter, and that has resulted in a significant order intake growth. And going forward in the coming quarters, we expect to have a similar kind of performance, wherein the order intake growth for the whole year will be very significant as compared to what we have had in the past.
Can you take us through your margin performance, how the margins have moved in this quarter versus last year, and also last quarter, because last quarter was a bit of a difficult one, because I think there was a loss at the net level in Q4.
Well, I would like to first look at the margin for the EBITDA margin for the whole year. And in the products business, we are certainly expecting upwards of 35%. This compares with, for the whole year, 33% for FY11. So 33% moving up to 35% plus. So that's expectation. In the first quarter, however, the EBITDA has been a little bit subdued because of the revenue growth not quite happening in this quarter, but that will be followed by that will happen in the coming quarters. So when you look at the whole year, we'll certainly have that 35% plus EBITDA for the products business, and that's definitely a very good, strong performance, and that's what we are expecting to have.
Okay, Mr. Menon, if you could just set this right, because from time and again we keep hearing in the market that you are looking at some kind of a strategic investor to come and invest in the company. Around April, there was a lot of talk about Accenture. Then we did understand that Mr. Jhunjhunwala had also picked up some minority stake in the company. But have there been any talks with Accenture or any other IT company to come in as a partner?
Not at all. We are not going on that track at all, and I have absolutely no idea what the basis of such rumors are. So as far as the organization is concerned, we are staying focused on our business. We are seeing tremendous growth. We are seeing good financial performance, and we are very bullish about our future. We are not considering any strategic investment or sale or anything of that sort, and we have not considered that. So I really don't know where this is coming from, and it is absolutely, it's just rumors and nothing but that. There's not an iota of truth in them.
All right, Mr. Menon, thank you so much for setting the record straight there. Pleasure having you with us, and congratulations on those numbers. The market, though, is not taking too well to those numbers. Stocks down about 3.5%. I guess perhaps some amount of profit booking coming in there, because it's a 5-fold increase in net profit for Subex. Let me go back across to Sharmila.